Hi, and welcome to this pencast on how to prepare a detailed bank reconciliation. In this pencast, we will look at the specifics behind bank reconciliations. How do you come up with the amount of outstanding checks? Not just give you the amount of outstanding checks. Rather, we'll go from book to bank records and show you in detail how those numbers are come up with. And then in a later pencast, we'll do a shortened version of it where those numbers have already been completed for you, and we'll check to see if you know what to do with them. So, in this pencast, we'll go for the details. Let's get the facts. The bank reconciliation will be for Edwards Company for March 31st. You are given some information. The first information you are given is information from the March 31st bank statement. Notice that you're given bank records that show you previous balance, total checks and debits, total debits and credits, total deposits and credits, and current balance, as well as specifics for checks and debits, deposits and credits, and then the daily balance. At the bottom of the bank statement are some informational items. NSF means non-sufficient funds, and IN means interest earned. Underneath the bank statement, you can see the information is provided for the company in this section. You have cash receipts from a cash receipts journal. You have cash disbursements from cash payments journal, and then you have a general ledger checking account for cash, where you can notice the cash receipts have been debited in total and the cash payments have been credited in the ending balance. What I would like to do now is to reconcile specifically one at a time each of these items, note the differences, and then prepare a bank reconciliation from them. The first place to start, or where I'd like to start, is deposits and credits. Notice on our bank statement we have a deposit in the amount of $43.40, and that agrees with our books. On our bank statement we have a deposit of $72.70, and that agrees with our books. We have a deposit of $295 on the bank statement. That is not on the books, so I will circle this as a reconciling item. And notice on the books in my cash receipts journal, I have a deposit of $2,090 that is not on the bank statement. Also note that that deposit was made on March 31st, and it's likely to be a deposit in transit, meaning it will clear tomorrow. Bank days end at about 1 or 2 in the afternoon, and any deposits made on the last day of the month on those days are typically credited to the next month. Let's now reconcile checks and debits. Once again, we'll start from the bank records. We'll look at the checks and debits column and compare it with the cash disbursements column on the book side. Notice as we start that the checks are presented in the order they cleared, not in numerical order. And also notice down under the accounting records for banks that our first check that we've written is $29.05. Any checks that are before this would have been cleared as last month's outstanding items. So our first check, check number 12874 for $1,210, surely comes from last month's bank reconciliation. Our next check that cleared is check 2906 for $3,850, and that agrees with our bank. Our next check, 2905, $170, that agrees with our cash disbursements. Check 2909 for $725 also agrees with our bank records in the cash disbursements journal. And check 2908 for $1350 also agrees with our cash disbursements. The next item on the bank statement is not in our cash disbursements journal or our general ledger. It is a non-sufficient funds debit to our account, meaning a check from our customer bounced. So we'll circle that as it does not agree with our book records. Now we'll go to our book records and circle the things that are not on the bank statement. That completes our look at checks and debits and cash disbursements. Notice that on the bank statement are circled things that the bank knows that we don't have in our books, and on our accounting records are circled some things that our books know about but have not yet cleared the bank. These are the items then that we need to prepare a bank reconciliation. So we'll now move over to our next page and begin preparing the actual bank reconciliation. The first item on our bank reconciliation is to enter the ending bank balance. I will go back to page 1 of our demonstration and grab the current bank balance at the end of the period. Notice it is $15,008. And I'll also go down and grab our ending cash balance per our records. In the general ledger cash account, note that it is $16,503. The ending bank balance does not agree with the ending book balance. They never do, and so we can see there is a need for reconciliation. Let's go back to the bank balance and see what is in the books that is not on the bank. First, we check the things that we added to the bank and the book. I go to the accounting records, and I notice that there is a deposit in transit that the books have added in, but the bank hasn't. So I'm going to go ahead and note that I've considered that and write deposit in transit. DIT stands for deposit in transit, $2,090. And I'm going to add that to the bank records. That deposit has been made, but it does not show up on the bank statement as it has not yet cleared. And I'm now going to look at the cash disbursements journal and grab the checks that have not yet shown up on the bank statement. Check number 2907 and list that. And check number 2910 and list that. 2907 was $460. 2910 was $340, and both of these are considered outstanding checks. They have been written, but they have not yet cleared. It's a good idea to note the check number for future reference. These should clear next month, but if they don't, then you'll need to contact whoever the check was issued to and see why not. If you add these two outstanding checks together, you'll note they total $800. Sorry about that, I had to take that phone call. So the two outstanding checks total $800 that the bank doesn't know we've spent. If you take the beginning balance and add the deposit in transit, that equals $17,098. In the homework platform we use, they have you put this total in. Though it isn't necessary, we'll put it in so it's more like your homework. The bank also doesn't know about the $800 that you spent that hasn't cleared yet, the deposit or the outstanding check, so we'll subtract those. When we do, we will come up with an ending balance, everything considered, of $16,298 on the bank side. Now that we've completed the bank balance portion of the bank reconciliation, let's move on down to the book balance. On the book balance, we're going to list things that are on the bank statement that are not recorded in the books. We'll return to the bank statement, and we'll notice the first thing is the bank added in $295 that we have not yet for interest. So we'll add in interest revenue into our bank reconciliation in the amount of $295. And again, we'll total it here, $16,798. That total isn't important, except that it's required in your homework management system, so we'll go ahead and use it. Now I'll return to the bank statement and grab the amount of the debit that they have that we don't have on our accounting records, a $900 non-sufficient fund check for a cook, a customer who bounced a check to us. $16,798 minus 500 shows an adjusted balance of $16,298 for the books. Notice that the bank reconciled amount and the book reconciled amount agrees, and so we have successfully reconciled our checking account. The next step would be to make the related journal entries. These are adjusting entries, and they're unusual in that they actually affect cash. By and large, the only adjusting entries that affect cash come from bank reconciliations. You could have some from error corrections, but by and large, these are the only adjusting entries that affect cash. We don't need to do anything with the bank side of things. This deposit in transit will clear, and these outstanding checks will clear. Things on this portion of the bank statement, or the bank reconciliation, are timing issues. Timing will take care of them. Things on the book side, however, are going to require adjusting entries to take care of. We have earned some interest we need to record, and there is a customer's bounce check. Let's start with the interest revenue. Let's record that with our first journal entry. Cash has increased by $295. We'll record that into interest revenue or interest income for $295. And then there's the second item, the non-sufficient fund check. If you have a customer that gives you a check and it bounces, you need to stick that check back in accounts receivable, control account, and their subledger, and begin collection efforts, and remove it from the checking account balance as well. So we have made the addition, we have made the subtraction, we've made all the adjusting entries required. What then is the checking account balance after all of these entries have been made? Let's make a cash account. I like to use T accounts. And recall from page 1, our ending cash account was $16,503 prior to the bank reconciliation, and then we added $295 for a deposit and subtracted $500 for a bounce check. If you total this, you'll see that this is also $16,298. A reconciled balance and the balance in our general ledger cash account both agree. Let's take a minute now, since we're not doing a lot with internal controls and pen casting, and have you come up with how many internal controls you can see in place in this bank reconciliation process. Go ahead, pause this, make a list of what you can think of. Alright, then let's get back to it. These are the things I came up with, and I'd like to basically describe them, but briefly. Establish responsibilities. Only certain people can write checks and make deposits and make journal entries into the checking account. This limits access and establishes responsibilities for each of those functions to an individual person. segregation of duties. The person who balances the checking account does not have access to making journal entries into it. It's a great segregation of duties. They are unbiased. They merely want the account to balance. They have no interest in the actual entries. Documentation is great. You have bank statements, you have cash receipts and disbursements journals, a cash account, all which can be compared to one another, and the bank statements from outside. So that's an independent verification from outside the business, so that kind of adds to that. Physical control. Cash is not on the premises, it's at the bank and safer. Finally, human resource. It's a safe idea to bond anybody that handles cash. Then if there is a mishap, you're insured and the business will not suffer any losses. So there are several internal controls in place for the cash account. Perhaps you thought of even more. Thanks for joining this Pincast on a detailed bank reconciliation. In the next bank reconciliation we'll do together, we won't calculate the amount of each individual outstanding check, but we'll just give you totals. And we'll work it from a total perspective instead of the creation of the totals perspective. Thanks for joining me.